Hey traders, welcome back to another Trade Your Way video. Today we're just going to have a quick overview before the markets open. It is Sunday 7th of March, it's 8:48 London time in the evening, so the Forex markets open in about 12 minutes. Let's have a quick look at gold though to start with. So gold has been amazing over the last few weeks. So it's made a decent move down to the 61.8. I've been showcasing this move and I've been trading this move. Traded only 3 days this week, Monday, Tuesday, Wednesday, short on gold. And that was my week. This is where we're at. This is what's been going on. This is a daily chart on gold. You can clearly see what's been happening, trickling down. So I would like to see a break to the upside, but in order to see any sort of movement up, we need to see a couple of days worth of retracement, and then decide whether or not, with the stimulus that's come in with the Fed and Congress passing a $1.9 trillion stimulus in the US. Let's see if that has a positive effect on gold in terms of people wanting to buy it as a safe haven, and then maybe see some dollar weakness come in as well. So we'll be looking for some correlation. Just have a quick look at this as we draw down. That's what it looks like. Bit of a wedge formation, bit of a double bottom going on there as well, bouncing nicely off that 61.8. Fibs don't lie, they are bang on the money. Trend line break would be needed either to the downside here for a continuation, which would then be looking for 1600 as the downside target, as per the daily and the weekly, which you can see. That's my 1598, 76.4. So key area, looking for a sell-off down there, but we may have a bounce up first. So that's what we're looking at in terms of gold. When you look at it again, just on the 1 hour, you can see that price action. You can follow us on TradingView as well. Let's move on to my charts. Have a little look just to give you some clarity as well, in case you can't see that. Let's have a look at that on the daily. So for a long period of time, we did have the double bottom going on here, which was support at the 50% of this range. Now this was last March when we had that big sell-off. So we've taken that last prominent swing low as our low point, as our 100% retracement, and we're just monitoring this move all the way back down. Now, are we going to get all the way back down here, or will we see a bounce off the 618 and a bit of a rally? Certainly is at the key point. If I was in fact to scale up to the weekly, you could probably see very similar price action, even on the bigger picture, where we take the next low, the next move down, which is it's $1,160, which is really key. If I just show you that, drag it over, there you go. That's what it looks like, the last swing low before we started making a clear, decisive move up. We could well see a deeper correction down to 1600s, 1617. In fact, is showing a 50% because we are breaking on down through 1725, which we did spend a lot of time around 1720 this week. Funny enough, bouncing up and down off here, but it's finally managed to push on through. So bigger picture suggests further downside, and we could come down to the 200 EMA on the weekly, which is this line here. The exponential moving average also ties in beautifully with our weekly trend line. So that would give us around 1617, 1600 first major downside, or next major downside, and then obviously if it was to get even lower still, we'd be looking for 1500. So there's scope there, there's potential for downside. So that's the bigger picture on gold. Okay, moving on. Next chart, dollar index. It's very relevant right now, especially with, as I say, US stimulus. This is a weekly chart. The monthly chart. This is what it looks like. So we were trying to get down to retest the previous low as a double bottom, but we have seen a little bit of bullish price action down here over the last few months. This is the third month where it's actually given a decent nudge back up. A bit of decent volume to go back up and retest previous structure, which was that 76.4, which was a key area, key target. You see a perfect bounce off there off the monthly, up to around a 61.8, and then just a continuation. It's stabbed on down, but yeah, I still feel that there is potential and scope for one more decent nudge down, which would just give us that strong bullish, a strong bearish candle all the way back down, and smash on down to retest, 89, and maybe even 88, maybe even lower still, down to about 84, 85. If we were to do something like this, take that last swing low, so when you scrunch up, looking for where price started to make it a clear move up from, you could say that we are looking at something like that. Just to adjust the fibs a little bit, put them on here, here. There you go. And we would suggest, it would suggest that it was a 61.8 pullback down of this much bigger range, and then we are actually looking for a lower still, which would be a fib extension, a 127 fib extension at around 84.20, which ties in quite nicely with 84.90 to 76.4. So maybe one more move down, break this previous low, break this previous structure. So T1 would be back down to this level here. T2 would then be about 84 to 85. So yeah, if we pull that to there, I'll show you what's immediately going on. Again, weekly charts, 4 hour, 1 hour. You see that bullish move off the back of the non-farm payroll. The weekly, this weekly, is encompassing all of this move. So the last major low, all the way down here. So if you just show you that again, what we're actually doing is let's just go to the weekly here, scrunch this up, scrunch it. You probably see it better on a monthly actually on TradingView, to be fair. What we're suggesting, or what we're saying, is this one here. So we would be looking at this as the low. Again, it's important to look when you're doing top-down analysis to look at the bigger picture. Where's the major high? Where's the major low? Does this have scope for further downside? It certainly does. You can see if this fails here, then we're going down. If this fails, we've got scope. There's so much room. There's an imbalance here where price is pumped up. We've pulled back 618, and then we've gone up to retest the high. This was last March with the pandemic, you see, and now all that hype's gone, and we've just been slowly going back down to the mean, back down to where it came from. Before it was sort of rudely interrupted going up as a double top. So it could suggest that we're going to see further downside. It just remains to be seen what happens over the next few months, how that stimulus is perceived by the markets, by the banks. But yeah, certainly there's so much room to the downside to fill this imbalance here. So yeah, if I just show you that on here, what I did, I had a trend line, and it was a trend line break. I mean, this had 4 points of contact as well, so it was very clean. And this on the weekly. So I mean, for argument's sake, we could see something like this, some sort of a retracement, because as the stimulus is being talked about and all that hype, they might manipulate price and they might drive dollar strength into the market to stop everyone out, to get some liquidity. It may take it up to that 38.2, which ties in quite nicely to that underside of the trend line, which is acting as resistance, support as before. Now it's providing the resistance, so it comes up, and where's support was support, now it is resistance. When something gets tested and broken, so support and resistance is tested and broken, it changes, doesn't it? It changes the role, and its job changes, so it goes from being support to resistance and vice versa. So that's what we're looking at here, 38.2 around 9480. Could we see some sort of a drive up, an impulsive move up, a bit of strong momentum, 200 nearly 300 pip move up on the dollar index? Certainly if it did that there, I'd be very interested to see what happens. Certainly that's testing last swing high as well, previous structure here as well. Get up here and then crash. We'll see. I mean, anything can happen. Early days, but it's just wanted to draw your attention to those two, gold and the dollar index, because both are going to be working hand in hand, correlating nicely. And obviously the pairs that I tend to look at, things like pound dollar, Aussie dollar, euro dollar, they're all going to be affected. I also look at the pound yen as well, and euro yen, so I want to see how they're going to be affected, because dollar and yen seem to be moving quite well together at the moment. So that gives you some insight as to what we're looking for. Patience is required as always, and I will continue to update via the live trading sessions every day.